Hey everyone, Michael here. In today's video, I'm going to show you guys how to use the Smart Money Concepts indicator by Lux Algo. This is a great indicator for new investors out there, and I highly recommend you guys get familiar with it because you're going to be using it a lot because it just saves you so much time. Now, first things first, I need you guys to go over here to Indicators, Metrics, and Strategies on TradingView, and I want you guys just to type in Smart Money. You guys are going to see it towards the top. It's going to be Smart Money Concepts Lux Algo, and in the blue, it's also going to be under Lux Algo. When you guys see this, give it a gold star. That way you guys don't have to search for it each and every time. It'll just be in your favorite section like it is mine, right here, Smart Money Concepts. Then I want you guys to click on this one time. After you guys click on it, you're going to see it has a basic setup for you guys, but we're going to have to make some adjustments here to make sure you guys understand everything going on, okay? So to start everything off, we're going to go through everything step by step by step. But before that, I want to make this just a little bit easier for you guys because sometimes it can be hard to read. I have my chart zoomed in 175% right now, so I can record this video and show it to you. If I go back out here to look at how I normally look at charts and at 100%, you guys can barely see any of those words, okay, or letters. So what we have to do is a very simple fix. Go over here to the Settings tab, go down, and you're going to see a bunch of these that say internal label size or label size, blank label size. I want you to turn all of these from tiny to normal before we get started. Swing label size, normal, nothing there. Label size, normal, and that's all of them right there. It looks like only about 3, okay? Then hit OK, and you'll see that all the letters are just a little bit larger, and it makes it a lot easier to see what's going on, okay? Next, we're going to go back to settings here, and we're going to start off with Smart Money Concepts Mode. Basically, what this does is you can see right here, we have a change of character, CHoCH. I'll explain what that is in a second. And we have BOS down here. That's going to change to see how many of those signals you actually see on the chart. If you do historical, you're going to see all of them. The BOS over here, change of character over here, the change of character over here. But if you go to present, if you leave it over there, it's actually going to say you can only use the last 2. So we're going to have the last 2 right here. Change of character and BOS. That's it. None of the other ones that we had before, they're all going to be taken off. I'd like to keep this as historical, and I'd recommend you guys do this as well, okay? Now, everything's back there. Next, we're going to see style and colored. You're going to have colored or monochrome. Colored means the red on top, the blue on the bottom. That's what you guys are going to be looking at. If you guys use monochrome, this is what it's going to look like. See how everything turned gray? No colors whatsoever. I don't like this at all. This is probably maybe for somebody that's colorblind, perhaps. I don't know. But I just don't like it. I don't recommend it. So I would recommend you guys keep this as colored, okay? Afterwards, you guys are going to be looking at color candles. If you guys use this, check this box basically, whenever it shows you a change of character or a bullish sign or a bearish sign, it'll actually change the colors of the candles to reflect that change. So if I were to change that to check mark, you see we had a change of character and you see how the candles actually turned green, and that was a good signal right there. On the other hand here, we had a change of character right there, a sell signal. It made some money, but not too much, right? The sell signal actually happened right here as well, and that made you some good money if you held the short. Here, a change of character, that ended up working out okay for you, right? So that's, if you guys just like to see the candles like that, it can help you out. You can always imagine just buying where the green starts and selling where the red is, or just wherever you're hitting that resistance level. Normally, you're selling at a resistance level, not necessarily where the change of character happens, unless you're doing maybe some very, very long trade. I don't recommend it though, okay? But you can see so far, sell here, it goes lower, buy here, it went higher, sell here, it didn't really work out that time. So, it's not 100% correct, but it can help you guys out. I'm going to turn this off because I like to see red and green candles. It's just my preference. You guys can always turn this off and on at your own preference. Next, you're going to see show internal structure and show swing structure. Let's talk about the structure. When the algorithm in this system is actually talking about structure, it's talking about the change of character and the break of structure. Let's go over here very fast. This is the diagram that actually Lux Algo has come up with, okay? And it shows you a change of character right here, a break of structure, a break of structure, and a break of structure, okay? So basically, a change of character means, if you look right here to the right-hand side, the price breaks above a prior low or high. So you can see right here, high, a lower high, a lower high, a lower high right there. And now we're breaking above that lower high right here. And that is a change of character, a possible reversal, and a bullish sign, all right? On the other hand here, you can see, maybe move my head over here a little bit. we broke down below a lower low, okay? Or a higher low, excuse me. So a low, a higher low, a higher low, we broke down below it, a change of character in the other way being more of a bearish look. And when you guys actually go over here and you guys look up the indicator, if you guys want to see this yourself, you guys can scroll down, and remember you guys would have favorited it by now. It'll be right here, Smart Money Concepts, and you guys can click right here on the right hand side. It says read more. It'll actually open up the page and it'll explain everything that I'm teaching you now, but not as clear because I'm making a video obviously. But you can see this exact diagram right here in more detail if you guys want to do that, okay? For now, I'm going to go up here and I'm going to show you guys the rest of it. Break of structure is the BOS. Basically, that's just confirming a trend. That's showing you the overall trend is continuing. And as long as you're having consistent BOSs, you're usually very likely to continue holding on to that position while maybe having some minor scale out opportunities, okay? Now, go back over here, go back to the settings tab to continue on. And basically, when you have this checked on, you're going to be showing internal structures. These are weaker internal structures. When you look at the swing internal structures down here that we'll talk about in a few seconds, these are much stronger and they have a different way of identifying them. You'll see right here if I zoom in, these are internal structures because they have a dotted line. You can see how the lines are dashed. Dashed line there, dashed line there, dashed line there. They have some power, but they're not as powerful as the swing ones, okay? So if I zoom out very fast, you'll see that, hey, we have a BOS and this is a strong one, a stronger break of structure. They don't happen nearly as much. You're not going to see them all the time, okay? Strong change of character there. You don't see them as often, okay? Change of character right there. And there's different ways you guys can use these, especially if you guys are swing trading or even day trading. A lot of times when we have a big change of character or even a BOS, sometimes they can be liquidity traps where people are looking to buy up large amounts in hopes that it can reach a fair value price. And we'll talk about that in a little bit as well. Okay, so if you guys don't want to see those smaller ones, those smaller moves, you can always uncheck this box and you'll see them actually just go away just like that, okay? All that's left with is the equal highs and the equal lows right here. Don't worry about those right now. I'm going to keep them on and I recommend you guys keep them on as well. If you guys only want to see the bullish structures, like you want to see just the break of structure, or you guys just want to see the change of characters, you guys can also just choose to see one of them. Sometimes this is the one where it gets a little bit based on preference. Some of you guys will only want to see change of characters and not the BOSs, and it'll just take the BOSs out. That's up to you. Sometimes I actually just use the change of character myself, but for this tutorial, I'm just going to keep it at all. Some of you guys care about the break of structure. I know it's good for the confidence that it's going to keep on going up. Sometimes I feel like I can clutter my chart, but that's personally just me. I'm going to use save it for all. And the same thing can be done over here as far as the bearish structures. So if I only want to see a break of structures, the BOS, I can just click on this and it'll get rid of the change of characters that are bearish, okay? Let's hit all again, and now everything's back to normal. And you guys can also check this box right here that says confluence filter. Basically, it means filter non-significant internal structure breakouts. I don't like this. I like to see everything because sometimes there's something I could just miss. And if you want to get rid of those other ones, you know, they're still important. Even though they're not as important, they're still important. You should still understand what's going on when you see them, okay? So, but if you do click on this, you'll see some of these actually go away. Oh, no, they're actually all important. Normally, some of them will go away, so you don't have to worry about it right now. This is Bitcoin, and you know, Bitcoin, so maybe it's a little bit more easier there. So afterwards, excuse me, you guys can change the internal label size. We just talked about that at the beginning of the video, and you'll see that what happens right here. You can watch all these get very, very tiny in a few seconds, right? Very, very tiny. I like to keep them normal. Now, as far as show swing structure, these are these larger ones that we talked about as far as BOS right here. And there's not really many more on this chart here unless you go back a little bit further in time. Again, change of character right here and a break of structure right there. There's not many of them, okay? Back over here in 2020, a break of structure. That was a really nice move. A change of character right here. And you guys can use this, of course, on any type of chart, whether it's the weekly, the monthly, you name it. It takes a couple seconds for it to load. But look, perfectly fine. There hasn't been any big ones as far as the weekly chart's been concerned, except for way over here, BOS. Wow, can you imagine trying to buy this change of character right here, or this break of structure, or this break of structure? Wow, talk about good timing, right? Now, let's go back over here to the daily chart. Let's go back to auto, and let's go back over here to settings. So, same concept as the internal structures, except for this is just showing everything as far as the solid lines and not just the dotted lines, okay? Same thing, everything else. All, you can look at just break of structures or just change of characters for the bullish and the bearish. Nothing new here. Swing label size, you want to keep it normal. Show swing points, I don't do this, but basically if you hover over it, it says display swing point as labels on the chart. I don't really see the point of doing this. This talks about higher highs versus lower lows. If I click on it, you may see some things pop up here. You see how it says lower low right there. See if there's any more. Lower high right here. I don't particularly need that. I don't think it really provides much value for me, but if you feel like you need that and you're a new investor, by all means, keep it on there until you get used to just seeing it with your own eyes, okay? Now, you're gonna see right here, it says show strong, weak, high, low. Let me hover over this. Highlight the most recent strong and weak high, low points on the chart. If I were to undo this right here, you would see that it takes off, well, this little line on the top. It's gonna be kind of hard to see. There's a line right here that showed up and it says strong high right there. You see this like a darker red right here, but on top there's like a little bit of a line right there. That's the line that it's actually showing and hiding. So if you guys want to see that, or this weak low right here, if you guys actually want to see that, you guys are going to keep this box checked on right here. Show strong, weak, low signals, okay? Keep that checked on. I'd recommend it. A lot of times that can be a good support level for you. Next, you guys are going to be looking at internal blocks or swing order blocks. Now, these blocks are the red and blue signals that you guys see in the bottom, these rectangles that you guys are looking for. As far as I'm concerned, I like to see the internal ones and the swings. Internals are usually more shorter term levels of support and resistance, or where institutional investors are going to be buying up amounts of crypto or stocks if you guys are using this on a stock market chart. So I like to keep both of these on, but you'll see sometimes when you click both, there's actually an overlap here, and you can see how that got just a little bit lighter. See? Sometimes there's an overlap, but what I want to do for you guys is turn both of them off. I want to zoom out a little bit. I'm going to take away all the other structures right here just for now. And then I'm going to turn one of them on and then both of them on so you guys can see the difference here. And just focus on, yeah, we can do it like this. So these are their internal order blocks for Bitcoin right now. See how they all popped up right there? Right there, okay. Let me turn them off. Here are the swing order blocks. Different. You see how there's some way down here on the lower end? Much longer time frames, much stronger levels if you ask me. But you could even see how there was an overlap where both of them were actually right here. So what I prefer to do is actually turn both of them on. So here, that way I can see everything going on. Oops, wrong one right here. Internal order blocks. So I can see everything going on just like that. I like this a lot better. It lets me see more stuff, and I usually like to see more stuff here than less, especially if you guys are new investors. It's just going to make your life a lot easier, okay? Now, if you guys feel like you have too many blocks and there's too many bars on your screen, you guys could actually just lower the amount of bars. So let's say I only want to see one internal order block, which is not something you would do. I would say stick to 5 and 5, but let's say you guys don't want to see it. You see how it cut off a whole bunch right there? You guys could always move it down a little bit more, and it'll show you which ones are the most important by doing that, okay? Back up to 5, and boom, popped all of them back up. Now, swing order, same concept here. Don't have to worry about it. We're going to zoom back in here bit by bit, and I'm going to turn on all the stuff I just had off here a few seconds ago. Internal structure back on, and show swing structure back on as well. Next up, we're going to be looking right here at order block filter. This one right here is method used to filter out volatile order blocks. It is recommended to use the cumulative mean range method when low amount of data is available, okay? That's this one right here. If you guys have been using a chart that has a lot of data and it's been going on for a long time, like Bitcoin or Ethereum or Apple, you're normally just going to keep it at ATR. It is rare that I have ever used the cumulative mean range. Usually that's maybe if I'm looking at something more of an IPO or something. To this day, I haven't really found a reason to really use that one just yet. But perhaps some of you guys may find one out there if you guys like to buy new coins that have just hopped on the market, or maybe a new coin just hit Binance, but it's been on another exchange for a while, so you're just trying to figure out how to trade it, but it's only showing you like today or the last week's trading action on TradingView. That could be a helpful tool, okay? Next up, we have some of the colors over here. And you can see right here, this is internal bullish OB, internal bearish OB, bullish OB, and this stands for order blocks. So you can basically change the colors here basically depending on how you guys want to use it. I've seen some people turn the blues to greens for buying signals. I personally don't care about doing this much. I've just kind of learned that blue is good, red is bad, kind of resistance versus support. But that's the way I've looked at it myself. You can see how it just turned to green right there. You guys can change them up if you want to, but it's not a big deal in my opinion. I don't really think you guys have to worry about it too much, okay? After you've changed the colors to match your liking, or maybe you guys haven't changed them at all, you're going to see this next checkbox right here that says equal high low, okay? Displays equal highs and equal lows on the chart. That's what the other two signals you've been seeing besides the change of character and besides the BOS is the equal lows right here, EQL, and the equal highs right here, EQH, okay? Now, basically that's just showing you that you have some equal highs. Basically, I just use that as somewhat of a level of resistance in the short term that says, hey, we're hitting some type of wall. It's not enough to be a major block, so it's not going to have that same type of resistance, but it's something that maybe we get rejected by in the short term. We're going to have to retest it out a little bit later. It's not something I'd recommend you guys actually have to use that much, because normally you can say, hey, there's a bunch of bars just going sideways. There must be something above it. You can usually infer that, but if you guys feel like you need it, you guys can always keep it there. If not, you guys can check this off. As far as the bar confirmation, the threshold and the label size, I would say keep normal. Personally, that's me, but you guys can always make it tiny or small. Threshold, I keep it at 0.1, and for bars confirmation, I keep it between 3 and 5. Sometimes I want a stronger confirmation, so sometimes if it's not too strong, it'll just take it off right there, and that way I only see the really big ones like right over here. Equal high, a little bit more important, you can see how it actually ended up having a larger rejection there. I'm looking for those larger moves because I'm primarily a swing trader, okay? Or if you guys are day trading and you want to have a larger move on a day trading chart, by all means, probably best to turn it to 5, okay? But for now, just because, you know, this is a lesson video, I'm going to turn it back down to 3 because most of you guys will probably just use it here. If you guys are doing scalping or really small trades, if you guys are looking for longer term trades, of course, you can always move that confirmation up to 5. But again, most of what you guys are looking for is change of character and a break of structure. If anything, I would literally just have the change of character on here just as a confirmation. Break of structure is always nice, but change of character is usually what helps me confirm that I should be opening a position or buying a position or shorting a position if I'm having a red change of character like we had right here. Remember, change of character right here, breakdown looking pretty nice. This one right here was a change of character that had a liquidity trap. And what ended up happening is you can see it didn't really break down. Liquidity trap right there, followed by a fair value candle. Oh, not a fair value candle actually. But basically we ended up having liquidity trap there and it moved back up. This is much harder to spot, and it's something that you have to be looking at other indicators and other technicals like, hey, there's support levels down here. What are we going to be doing during that time frame? What are we going to be looking at, okay? Next, after you do all of that, I'm going to be going back down a little bit more. You're going to see right here, it's going to be fair value gaps. This can be a complicated thing to explain because there are so many of them on every single chart. Once you guys see them, you can't unsee them, okay? So basically, I'm going to check this on so you guys can see what I'm talking about, and I'm going to take the auto threshold off here very fast. Click that on, click OK, and you're going to see all of these green bars pop up right here. And basically what fair value is, or the fair value section is here, is whenever you have a very large candle like this, and both the wick on the candle before and the candle over don't overtake the entire candle, which is very easy for a candle not to do, you're going to draw a rectangle there, okay? And what that rectangle does here is it's the fair value gap. So let me drag this over here. Let's move that up a little bit. So it's matching this wick from the candle before and this wick from the candle after. Move it up a little bit higher. You drag it out. Usually when you have such a big momentum like this, the price always finds its way back into this zone. Like 9 times out of 10, it finds its way back into this zone. And you guys can spot these everywhere. And I mean everywhere on any chart you've ever looked at. They're all over the place. And usually it's just going to show you that, hey, we're most likely going to come back in here. So if you're up above it, you might have an opportunity like, hey, we hit a level of resistance up here. Maybe I could actually start shorting this at these levels of resistance, and it'll eventually get back into this zone. And when it does, I can start to close my positions. All right. Now, let's find another one here very fast. This one's only showing you a bullish one, but there are tons of them here. Long candle. This wick did not overtake the top of the candle. This wick right here did not overtake the bottom of the candle. So what do we have? We have another one right there. There we go. And what do you know? The price eventually came back into the gap. It came back. It doesn't have to go all the way to the top. It doesn't have to go all the way back into the middle, although most of the time it will go back to the middle. But guess what? It doesn't have to. It hit the gap, and guess what? It came back down. That's all a fair value gap is. Sometimes you guys want to automate it. In my opinion, here's what I'm going to tell you guys to do. So You're going to go down here and you're going to see fair value gap. You can use this one if you want to. I would recommend keeping auto threshold on because you can see how it's more useful, this one. I'm actually going to say don't use this one. Go back over here to indicators, metrics, and strategies and type in fair value. Then you're going to go to the second one. It's going to be fair value gap by Lux Algo. They have a separate indicator for this that I personally like a little bit better. Let me show you why. I'm going to click on it here. And you can see how it actually makes it a little bit longer. And when I get rid of this very fast, there we go. It will actually adjust the gap as the wicks come in. So before the wick actually came in here, you can see it actually already came back down to the gap. If I was using a straight line right here, you can see how right here it actually already came back down into the gap as well. But as the price changes, it keeps the gap around. So just in case it gets back into that zone, you can say, hey, it's getting back into that fair value gap. Sometimes if it comes back around 50%, that's usually a good buying zone. Right now, we've actually reached that 50% zone as far as Bitcoin's concerned. Maybe we have an opportunity to pop back up. Of course, if you guys are watching this down the road, CPI data is coming out tomorrow. So that's why we're looking so sideways here as far as Bitcoin's concerned. You guys will have to be understanding what's going on in the market as well. Just don't blindly follow those signals. Again, we had a fair value gap. You can see the bottom matches with the height of this wick right here. The top matches with the low point of this wick right here after a massive candle. And we came back into this gap. We filled the gap and then we came back up. Hit around the midpoint or somewhere close, a loading zone if you guys would like, and boom. On the other side of red, again, we came back into the gap. Somewhere in there you might be looking as an opportunity to short. But the main point here is whenever you have the gap, the price always comes back into that gap. Always comes back into the gap. Like 9 times out of 10, it'll come back in, came back in, over here. Did not come back in. That was a part of a big move. Doesn't always happen. Right here, didn't come back in. Again, started a big rally. Right here, came back in. Here, came back in. Here, came back in. Here, came back in. Came back. Came back in all the way over here. It took some time, but it came back in. I know it sounds weird like that, but there's a magnetism force here that keeps the market from going too wild and too berserk in one direction. It's usually the fair value gap system. Now, you guys are going to see these all over the place now that I explain this to you. But if you guys prefer, I would say this one works a little bit better to me. If you guys like the other one, definitely feel free to use it. And again, if you guys want to learn more information about it, you're going to see it down here. Fair value gap. Right here, you can always go to the read more section and it'll actually explain all of it for you in detail and show you diagrams and how they might recommend you use it. There's some math here as well. This one's only a one-page one, but again, if you go into the read more section of the indicator we're talking about now, the smart money concepts, it'll break it down in there as well. But the different version that I said it probably would be best to skip, okay? Next, I'm gonna hide that for now because I don't think we need to see the fair money value dips or gaps, We're gonna go down a little bit more. And if you guys want to, you can also change the colors and the time frame of the charts. I don't recommend changing the time frame. I'd leave it on chart. Bearish red, bullish green, perfectly fine. Extend the fair value gap. Sometimes if you guys want to, you can have this set between 1 and 3. It'll say determine how many bars to extend the fair value gap boxes on the chart. It depends on how long you want to see this thing going across your screen. I can usually kind of follow the lines in my head. If you guys don't want to do that, it's perfectly okay. You guys can just bump this up to maybe 3, 5, maybe even 10 if you guys want to. I don't think you guys have to do it that far, especially if you guys are day trading. You guys might just leave it around 1 to 2, maybe 3, okay? Next, if you guys want to, you can click high, lows, MTF. If you guys want to see the high and lows for the day, you guys can click this one and it'll show you the highs and lows. Normally, we keep within these higher lows and you see some resistance levels at the highs and you see some support levels at the lows. Nice and easy. It'll just keep those 2 lines on there no matter what time frame you're on. Those 2 lines will be right there. I go to the 30-minute chart. As soon as the day starts for me, you'll see the lines right there, and it'll show you everything that you need to know, okay? Nothing hard about that right there. And you can see right here, there was some resistance, broke out, some support, heading up for some resistance right now as far as Bitcoin's concerned. After a change of character, boom, and now a break of structure. The trend is now continuing, and that looks like a nice move happening right now, okay? Now, let's go back down to the bottom. Or you guys can do the weeklies if you want to, or the monthlies. If anything, I would just say go with the dailies. Weeklies are fine if you guys want to do that as well. But normally I just click on weeklies. more to just look at it for a quick second, then I uncheck the box right afterwards. Daily is something you can really just keep on all the time if you guys wanted to, okay? Next, you guys are going to see the last part here, which is premium and discount zones. Now, I'm going to zoom out on the daily chart so you guys can see what I'm talking about. Let's make this a little bit larger. There we go. Well, I'm like that. Yeah, I want you guys to see everything. Now, going back down here, there's going to be one last part, premium discount zones. Let's check that box. There we go. So now, excuse me guys, you guys can see this discount zone at the bottom and this premium zone up here. I'm going to uncheck it, disappears, recheck it, reappears. So that way you guys can see what's happening. And you guys also have this equilibrium zone right there. So basically, if we get up to the premium zone, that's usually a strong sell or a strong opening of a short position for me. And if you get down to the discount zone, that's usually a strong buying opportunity for me because it means we have a strong level of support and I want to actually buy out some crypto or some stocks at that level, okay? When we get back down to the equilibrium zone, usually that's just a level of support that I may try to do a day trade off of or a short-term swing. But overall, the general trend is going to be matching some of these levels, okay? And this will always change based on what we're looking at. So basically, if I hit OK, and I just do my basic technical analysis, you guys can see there's a little bit of support around this range right there from this wick over here to this wick. There's some support, and of course, you can see some support probably from back over here. That's what it's losing, okay? So you can see all that support right there. Again, just use the gray line. I think it'll be perfectly fine. Afterwards, though, if you guys want to, you guys can change these colors up. I don't think you guys have to, but it's okay if you guys need to, okay? So let me explain how to actually make money using this. Primarily, the way I'm using it is, hey, if we get down to a discount zone, I want to buy. If we get up here to a premium zone, I want to sell or short, okay? But really what you guys are looking for is change of characters and break of structures. Primarily though, change of characters. When you see this change of character right here, look at that. If you would have bought right there for whatever reason, you probably want to see a breakout or something else happening, of course. But boom, okay? Break of structure, it continued to move up. You could have bought right here on the break of structure. You could have made some good money there as well. Now, on the other side here, we have a change of character. It broke down. It ended up coming back down, but it actually had a little bit of a bounce. So that might be a little bit scary for some folk. So it might not work as much as you want to, okay? Now, change of character right here, swung up. That was a good play. Normally, if you have a change of character and you're kind of at a support level already, like down here, maybe it's best not to actually open the position. If you guys don't have a solid level of resistance above you, or if you guys have a solid level of resistance above you at a change of character, maybe be a little bit more hesitant, okay? You can see on this one, the big level of resistance was way up here, not down here. So at least you could have tried to trade it up here, and you could already see we would have been hitting some type of red bar up here, okay? Again, the larger ones though, break of structure, much more impactful. You're normally looking for a very, a change of character that's a solid line, much more powerful, very good move. It shows a longer term trend here, okay? And you guys can use this on any time frame you guys want. Let me back up a little bit more here. And there you go. You can see how the equilibrium on Bitcoin's weekly chart is all the way back up here towards 36,000, while on the premium, it's all the way up here towards $67,000, $69,000. We're really far away from that. And that next level of support for Bitcoin might be all the way down here around $10,000. Now, if we do a dip down here and we stop somewhere in the middle, we're going to have a new bar pop up. And I want you guys to understand that these bars pop up after we find that bottom. So for example, what I'm going to show you guys very fast is, with all this stuff that we've had, we're going to start from before COVID. We're going to watch the entire chart together so you guys have a clear understanding of what you're looking for bit by bit. This is going to be the part that actually shows you guys like how to actually use the indicator. And I know people say, oh my gosh, you can see that, like, oh, you could have seen all of this stuff happen in the future. That's not the way this indicator works. Lux Algo will tell you that. This is not some type of miracle finding the future indicator, but it is an indicator that can help you make some serious money if you guys actually understand how to properly use it, okay? So we're going to be using the 3 times speed and maneuvering to the 10 times speed, probably somewhere in the middle. Let's kind of push play, okay? We're starting off at Thursday, the 2nd of January of 2020. Let's go. All right. You can see we hit the resistance. You see how the red bar went away. We have a change of character, a nice buying opportunity here, and look at that move. And what I'll actually do for you guys right now to make this a little bit easier, because I know this is going to be a lot of information, let me actually go over here and change to color candles. I think this will give you a good idea of like buying and selling, okay? So let's go. Still looking green. The trend is still green. There's been no change of character on the downward side that's red yet, okay? Still no change of character, right? This is a daily chart. It's going to take some time. And you see right there, change of character right there, the first one, followed by the break of structure. And you can already see how that first move right there gave you a good signal, okay? Still no change of character on the green side. And you notice how you're not actually shorting at the top. You're not actually buying at the bottom. That's not what this is. It's trying to teach you guys to just trade the momentum and the trend, not to find the bottom of the top, because that's just such a hard thing to do. Nobody really knows how to do that. There are some gurus who are going to tell you like, oh yeah, I know how to do that. They're lying, right? But you see right there, change of character. Look at that. And you can see how this looks in real time. And you can see all these different support levels, all these different resistance levels. You can see how this change of character really didn't lend you too well. It kind of found back into this zone right here, which you could have made money, but honestly, it's not the amount of money you're probably looking for here. A change of character here that went down, still green. A large change of character right there, going into a premium resistance level that's holding for a while. Break of structure, still holding, okay? Now I'm gonna change this up to 10x speed and I'll be pushing pause and go a little bit faster, okay? Now we're looking more at the COVID experience here, change of character. Positive. You can see these waves here. And I want you guys to understand, change of character, you could have made money, yes, but you would have had to see what support levels were over here. Maybe some support over here. You guys have to use other technicals, otherwise you guys may be caught in some traps. This thing works a lot, but it's not perfect, and that's what I'm trying to explain to you guys right now, okay? Change of character, really, really nice move. Change of character did not work. It worked a little bit, but not really. Another change of character worked out really well. BOS, and you have to understand if you're in a bear and bull market as well, as far as Bitcoin's concerned, that's really something as well. Another change of character, that change of character didn't work. The next one barely worked. Red one working a lot better now. Change of character, let's see if it actually ends up working out here. Did not end up working. This red one did end up working, nice little dip there. Good again. So I would say, 9 out of 10 times, maybe even just 8.5 to 8 out of 10 times, 4 to 5 times, it's working. But you can see when it does work on the upward moves, you're making some good profits here. So that's why it's important for you guys to have stop losses here to mitigate those losses and let those runs that really do well, like this one right here, end up just making you a lot of money. This is where your market strategy really has to come into place, because look at these beauties. This is some really great, amazing plays. Now we're all the way back over here in 2022. Change of character, again, moving down. A little bit of a change of character high, didn't really work out. Right here. If you guys have a proper stop loss, you're walking away with some really good profits if you're just using the change of character alone. And that's why I usually say I'm just using the change of character and I'm not really looking at much else on this chart, okay? But you guys can see now we're almost to where we are today. Now it's November. Small change of character here, went up a little bit more. Change of character here, look at that, all the way up to $24,000, and we're back to where we are today. Still looking green, and still haven't seen the change of character just yet, but we may see it over the next few days if Bitcoin were to take that next step down, okay? So guys, I hope you guys truly enjoyed this tutorial. If you guys have any questions, please feel free to leave them down below, and I'll make another video to explain any questions that you guys may have, or I'll just answer them down below in the comment section. Please make sure to subscribe, and I really do appreciate you guys choosing to watch the video. Thanks.